Good morning. It's Wednesday, May 28th. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So we have two drivers for today's price action. We've got the FOMC minutes and then we've got earnings. So looking at the U.S. equity markets, pushing higher here as of this recording, 59.40 last, up about 5 3/4 on the S&P 500. So equity futures slightly higher as traders are awaiting the direction for the most critical earnings of the season, which is Nvidia. So the options market, and I find this really interesting, it implies a post-results move of about 6% in either direction. The ironic thing is that being an option trader, waiting till after the bell to get these earnings, you're not able to get out of the positions here. So that's why you'll see some wild swings in the equity futures markets and then also in the equity futures options markets, as opposed to the Nvidia options, which you'll have to wait until the next morning before you could square up any positions. So this is more or less usual trading here in Nvidia with that 6% move in either direction. So the numbers, they are going to be a little bit tricky to interpret because demand remains strong from US customers, but Nvidia is facing these restrictions in China. So you look at Morgan Stanley and some of the other analysts, they are warning of potential for kind of a messy quarter here with the current estimates. They're not reflecting Trump's ban on Nvidia selling its H2O chips in China. So this curve has already enforced Nvidia to take about a $5.5 billion write-down, and that was one of the big sell-offs we saw on the NASDAQ. So you look at the technicals on the S&P 500, you really want to keep an eye on a retest of the 5,900 to 5,903 level, and then if you're bearish, you want to see the market kind of break below that low and stay below it for the remainder of the day. So minus this, if 5,900 gets tested again, we'll probably see another move back up to about 5,930, 5,940 in that region. So we'll also have before that the FOMC minutes, and I think that you'll see some movement with the FOMC minutes, but really these have been kind of non-event drivers here recently. So they held their rates steady at that May 6th, 7th meeting. They cited the increased uncertainty about the economic outlook with the rising risks of the higher unemployment and inflation due to the tariffs. So they've got a cautious approach on monetary policy. I know there's a high bar for about 3 interest rate cuts this year. I think if that was going to play out, you'd see something like a 50 basis point cut at a September meeting and then a 25 basis point cut at the December meeting. But likely we're not going to see that because they are revising up their core inflation and their unemployment rate for 2025. They've also downgraded some GDP growth, suggesting that the Fed is most likely going to keep kind of rates on hold pretty much throughout this year with some slight risk here going into the end of the year. An interesting note here that a few people sent me was that with Florida, and that's where I currently reside, Governor Ron DeSantis signed a bill on Tuesday that starts the process of making gold and silver a legal tender in the state. So he said that the move was to ensure Florida's financial freedom, and Florida's recognition of gold and silver follows the footsteps of states like Utah, which implemented that in a law in 2011 to recognize gold and silver as legal tender and exempt coins from state taxes. So what will that do to the gold and silver market? I don't know what it'll do, so I guess it's more for nostalgia at this point. So you look at gold futures here, up about $11, 33.40 last. So that comes after we had a 2-day decline in the gold market as the markets are really kind of wait and see mode here for a few things with tariff announcements and things like that. The problem is that you get Trump comes out with this really hard announcement, very critical, very frustrated in his dialogue with regards to countries and how fast they're moving with the negotiations. Remember, the European Union is like 27 nations here. So they've got to figure out what's in the best interest for each one of those and then bundle it into a package here. And Trump is getting frustrated with it. So he comes up with harsh rhetoric, gold futures rise up. And then what does he do? He kind of reverses course because he's getting a lot of his advisors put pressure on him to do so. Or you get the damage control from Scott Bessent that comes out, and we see the relief rally in equities, and we see gold futures edge lower on that. So you look at the gold market here, we're either seeing two breakdowns. And if you get the chart back, this is what I've been sending out here, is that you'll see this bull flag that's going on in the gold market at the moment. We really need a break above, and this is on the August basis, about 33.80, and then you need to see the market continue to go from there, like a close over 34.05, and then I think that the market could start attacking the all-time high, that previous high we've seen, and then even push on to something like 3,600, which is an upward channel move. Or you get it where we're up at that level here and we start to break down again, and it's nothing but a series of lower highs and lower lows on the chart. Not necessarily big lower lows, just some smaller short-term lower lows, and that's the nature of the bull flag. And the frustrating part is that the market goes back and forth on it. So the reason why I do the chart pack, and I've been doing this for like 20 years, I just haven't published any of the charts that I look at, is that if you were to sit here next to me right now, you'd see one television that has about 8 charts on it flowing in 5 and 15-minute increments. And then I have another monitor next to me that has about 27 charts on it that are all the daily charts with my personal notes that I put in there, and that's what we're putting in the chart pack. Now, what I do is I look at all my fundamental research, all the things that if you were going to be sitting next to me watching a hockey game on the couch, chances are I've got fundamental notes in my hand where I'm reading stories about like Florida and them implementing, gold and silver as a legal tender, or things about the OPEC meeting and stuff like that. But when it comes to the day, you don't have time to make those kind of, reading and things like that. So what I do is I utilize the daily charts and the shorter term charts here to look at maybe the wave and the ripples and see which way the current is going. And what it does here is that it avoids personal bias dictating what you should be doing in these markets here. So when these markets start to break over key levels, you need to change with the dynamic and the structure of the market changing. So that's why on the gold market, I'm hesitant to be a longer term bull unless we get the breakout above it, or if we retest some of these oversold levels here. Those are areas where I would re-enter or look to re-enter with clients and things like that. Not specific trading advice to the public, just an insight as to how I play on these markets here. So I use those charts in the chart pack as kind of a roadmap to trading and risk management. So really what I said is that gold is really looking ahead, and investors are setting up for the Fed's preferred inflation measure, U.S. personal consumption expenditures, and the price index on Friday. So that's where you're going to see another kind of explosive move on the gold market. But gold has been much more sensitive to any kind of discussions around tariffs and trade talk. Now you push on to the industrial metals, which that's where I've been much more constructive on. Silver, copper, platinum, palladium. I think that those markets are giving you better insight as far as the charts, and they have the longer term tailwinds because you look back and you back test, and remember, past performance not indicative of future results. But anytime you've come out of these crises recently, it's been gold leads the way upwards. You get the gold silver ratio at highly elevated levels, and then the crisis subsides, and then the market takes over, the reflation game takes into play. You start to see, industrial demand pick up. You see economies pick up again because they get the sense of sigh of relief. Governments are willing to spend again. People are willing to spend again, and that's where industrial metals take off for here. And I think that that's where you could see silver really break out to the upside and continue to go. We saw copper test the resistance point that we were seeing. And then if you get the chart pack again, when I see resistance points, those are the places where you are looking at harvesting some of your position. And when you get down to critical level supports, that's where you're looking to stick your toe in the water. And when I say stick my toe in the water, just because of the fact that the market hits a certain level doesn't mean you go dive into the deep end of the swimming pool. You don't know if there's alligators at the bottom of it. So you want to just kind of wade into this. And that's why I love the micro contracts when it comes to the futures market. I think that the CME, the exchange, has done a great job implementing these. I wish they would do more and even take some of these markets down to like 500-ounce silver, 100-ounce silver, things like that. Like they've done such a great job with the gold market with the 1 and the 10-ounce contracts here, because it allows investors an opportunity to step into these markets. And I'm not downplaying the risk. I'm just saying that the barrier to entry as far as margin requirements and account sizes comes down quite a bit. So bit of a discussion there. But copper market really looking for that breakdown into the 460s before the spot where I think that prices start to go on sale. Platinum futures 1094, still doing some price discovery. You got this massive pull higher, and then you get this sideways action where the bulls or bears are doing a little bit of battling here. Personally, if I was a mining operation or something like that, I'd probably look at doing some hedging. That's where short selling comes involved and things like that. But that's somebody just like a farmer sells that December corn crop to lock in their profits for the year. That's what mining operations do. And guess what? They utilize big banks to do that, and they sell lots of contracts short. So expect them to do that on the silver market when you get to $35 an ounce. Expect them to do that on the gold market when you get to 3,500. You get copper up north of $5. You probably see that as well. Now, palladium is starting to work its way. It rallied up to the resistance point, failed there, started to come down, and then now we're kind of returning back to the original breakout, which was this wedge here, and we're coming down in this pattern. Palladium is generally a market that we're not very active with because of the wild swings. The 100-ounce contract, it could really do some damage if you're on the wrong side of it, especially if you're trying to buy the breakout and then you didn't quickly cut those losses there on the downside. So we're looking at that market as far as the September contract. Now, again, you get to the ETF flows, the exchange traded funds. They had about 34,000 troy ounces of gold holdings yesterday, brings this year's net purchases to about 5 million ounces. You go to the silver market, and this is where things, again, are getting interesting because the ETFs, they added another 528,000 troy ounces of silver, brings this year's net purchases to 25 million ounces, and it's the fourth straight day of growth. So you're getting people rotating in there as well. You got Bitcoin futures taking a little bit of a breather, a lot of discussion about Ripple and things like that. Trying to get an FCM here where they'll approve where we could start trading in the Ripple. They've launched a micro contract and a regular contract, but the micro contracts, again, great ways to get into the market. Same thing with Solana, they have that. They've got Ethereum, they've got Bitcoin on the futures contract. So the ability to give you some leverage. And a lot of people, what I'll see is they'll take down their actual physical Bitcoin holdings, and then what they'll do is they'll look at the futures markets to replace it because of the fact that you have some leverage involved in that market. Again, not a recommendation to the public, but year-to-date percentage changes, gold up 6.1%, silver edging higher up 3.5%, and those are the year-to-date percentage changes on the ETF flows. Gold-silver ratio sitting right at 99-1. Again, recent low 97-1 on April 23rd. Gonna need to see a break below that before things really get interesting. And then you get crude oil futures here. Oil futures are up about 60 cents. That's about a 1% move higher. 61.50 on that July contract. So 63 to 65, kind of that resistance zone that we were coming up to. And it's really a lot of dialogue between the US and Russia, the conflict, the sanctions here, because Russia has been selling a record amount of oil to India. They want to sanction that, things like that. Then you got OPEC Plus. They'll have an online meeting here today reviewing production quotas. Then they're going to have a separate meeting on Saturday to decide the output levels for July. The expectations are for OPEC Plus to leave longer-term targets for 2025 and 2026 unchanged, with more sensitive discussion about the output levels being finalized on Saturday. So it's led by Saudi Arabia and Russia, and they want to maintain their current pace of increases to complete the restoration of the 2.2 million barrels of output by October. So the market is cautious due to concerns of oversupply, possibility of an economic downturn, and oil prices have reflected that in the price with the sell-off all the way since January. So we do have wheat futures edging up just a little bit higher. A lot of rain here in the China area, a lot of rains in the plains here, putting pressure on that market yesterday. Corn futures remaining a bit elevated, 461. Bean futures down about 2 cents. You got soy meal, that's a market that we're starting to attack and identify. You want to look, if you're going to look at soy meal, you start to look at the farther out contracts like December, September. The chart pattern is starting to indicate a breakout where the July contract is not indicating the breakout yet. So that's why you want to look at where the strength is at. When you play agricultural contracts and things like that, even natural gas, for instance, remember the contracts in the mid-year, mid-calendar year months like the July, June, and August natural gas, those have different fundamentals and dynamics than December, January, February, which focuses on cooling and things like that. So that's why when you start looking at different commodities, you want to look at different months out there and see, is there some other change in dynamic in those farther out months. So longer video here, a lot of process, a lot of things like that, a lot of insight on as far as how I play these markets. But you got any questions, send an email at info@bluelinefutures.com. You want to open up an account, really easy to do. It takes about 10-15 minutes. You can ring the sales line. Those guys will get you set up here with whether it's a self-directed account, you want to work broker assist, you want to work with myself or one of my partners, we could do so as well. So remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, go get them.